Hey guys, it's Nathan Gorth with Nathan from theLender. Hey guys, today we're going to talk about on Playbook financing real estate. It's what we do every day, so let's talk about it. So to get started, guys, everyone knows there's a difference between qualified mortgages and non-qualified, right? So let's get started with qualified because we're all very familiar with it. Every commercial you see is about it. It's very popular. So basically qualified mortgages are just that. It's a conventional loan. It's usually a 30, 15 year, 20 year amortization. For a rental property, you can use market rents, you can use leases, but mostly you qualify based upon your debt ratio, your income. Usually with investment properties, you're going to pay as little as 15% down. You close in your personal name. It's for single family homes, 1 to 4 units, warrantable condos, and PUDs. Then you have what's become very popular over the last 3 years, which is called conventional second home loans. A lot of lenders sell those as short-term rental loans. And I say that because yes, you can get it done as a short-term rental. Yes, you can underwrite it. Yes, it meets Fannie Mae's guidelines for it. But is it right for you? And what I mean by that is, have you called your CPA? Have you asked them that the tax difference between a second home loan and an investment loan, right? So it depends on how you classify your home. That depends your write-offs. So if your lender is not telling you to check with your CPA, find another lender. Those second home loans though, you can do condos, PUDs, single family homes. You can get away with 10% down. You're paying PMI on it because you have to pay the insurance, right? Because you put 10% down, it's a huge risk. No rent can be used to qualify for the property. You close in your personal name. But once again, check with your CPA before you listen to any lender to go that route, especially if your goal is to treat this as a true short-term rental and get the full tax benefits on the write-offs. Then you have my favorite category, which is non-QM loans. Non-QM loans are not conventional loans. They're not insured by the government. You've got bank statement loans, which are one of my favorites, right? We can look at 12 or 24-month bank statements, take an average of your income. We can underwrite with 3 different ways within that. I will tell you, this past week, talking to 2 different clients, not every lender underwrites bank statement loans the same way. There's a guy that's, advertises in a lot of Facebook groups that he's a bank statement loan officer. The way he calculates income and debts is highly different than ours, and he seems to get people more turned down than we would. So I will tell you, ask how the loans are underwritten by that loan company before you go with them. They're great for self-employed people. They're great for people that have been in business for 2 years. They're great for people that have owned real estate forever. They're great for people that have recently quit their job because they've owned real estate the last 3 years and they're making great passive income. They are both for owner-occupied and non-owner-occupied properties. You can go as low as 15% down. They're great. You can also use market rents on investment properties. Then on the non-QM side, you've got several loans, but probably ultimately my favorite for scaling your investment portfolio is going to be a DSCR loan. It's non-owner occupied. You're qualifying based upon the income from the property, whether it's short-term rent or long-term rent, whether it's Airbnb, appraiser, or my favorite is looking at the last 12 months of its actual true rental history. If it's a current Airbnb, VRBO, anything, and we can see finances that show its true income for the last 12 months, we can underwrite with that. So why not? And also, I love the fact that you can invest in an LLC right off the bat. You don't have to quit claim deed and be worried about due on sale clause, where if you change the deed, they could technically ask for the loan payoff in full right then and there, like they can on conventional. Also, there's technically no jumbo limit, right? So if you want to buy an investment property at 1.6 million, it's not a nightmare to underwrite like it is with jumbo loans. So it's a great product. Then you've got the next category that a lot of investors know, which is called hard money loans and owner financing. Hard money loans are amazing loans to have in your back pocket. They're great for properties that are distressed. They're great for a bridge loan. They're great if you want to do a fix and flip. You can, buy and rehab within that loan. They're higher rates, they're higher fees, they're usually shorter terms. A lot of people do a 12-month or 24-month line of credit for fix and flips. So you want to be prepared and ready to refinance out into probably a DSCR loan if you're going to hold that loan, and be ready for that. But they are great for those things. Owner financing is great for people with rough credit but have a lot of money down, or they have great income and they just need to buy a house now build their credit back up over the next 12, 24 months, and then refinance into a qualified or non-qualified mortgage. They're also great for distressed properties, for people who, you want to say, hey, look, I'll buy your property from you if you own or finance it. Let me fix it up, and then you refinance out of that into the new value. So when you're choosing the right financing option or the right lender, here's some key questions to ask. Are you an investor yourself, right? Why not deal with a loan officer who invests in properties? I own investment properties. I'm actually doing a burster right now, right? I'm fixing up a short-term rental. Once it's done, I'm going to refinance to get most of my money back. That way I have the least amount of money in this property, which is going to be great. The equity I get from doing a lot of this myself. It's a lot of work. Have a lot of friends that are helping me and family. But at the end of the day, it's a great way to take a de-stressed property and make it a great rental. So ask your loan officer, do they specialize in this? Do you have control over your guidelines? If you broker it out, what's the turn time if we have an issue or questions? I came from a huge mortgage company. If I had to ask a question to the company we brokered out to, I was told that the minimum turn time was 3 days because you had to go through all these hoops to get an answer. That kills turn times on closing, and it's really frustrating not having an answer. Next is, how quick can you close a loan? Who will be handling my loan? When you get to those big loan officers that are big name people, how often can you call them? I hear certain names around my area in East Tennessee a lot. People call one and done loan officers because it takes them 48 hours to call you back. That's unacceptable in my book. I get 24 hours, that's kind of the average. But 48 hours to no call back at all, or always to have your assistant answer questions, for me, that puts something in my stomach that doesn't make me fit right, because that client should be seen as a priority. And then also ask, will this loan actually help my goals? If your goals are to get the best write-offs and everything, does a second home loan help with that? Check with your CPA. If you want to put properties in an LLC where no one sees your name, it's a true business, why go conventional? Why not go DSCR? So check to make sure your goals line up with the products they're offering. And if not, find someone who will. Then the other question is, what are your fees? Are you brokering it out? What are your broker fees? What are junk fees? And then my favorite question, and people laugh at me all the time, is, what is your 50,000 foot view approach to real estate and to building a portfolio? Because a lot of lenders look at each deal individually. I don't. You gotta look at the whole picture, right? If you don't see the whole picture, you're probably gonna miss the mark with doing one deal, right? Talking to someone 2 weeks ago, they were trying to buy another second home loan, right? Their lender said they should do it. It's in a different area. They got denied because they couldn't count rent, and they bought 14 months ago a second home loan. So I asked several questions. I'm not even the loan officer on this. They reached out to me on Facebook, talked to them. And here's the thing. Their loan officer was so worried about getting the deal done, getting that check, getting the loan closed, that they didn't suggest how to set up for the future where, hey, if you want to go a year from now and buy another property, set up with the right things now to help you where you could help your debt ratio in the future, or help where you don't have to wait on your tax return. There are key things you can do that will help you and not hurt you. But a lot of loan officers don't look at the future. They just look at the close date and be done with it, right? That's why you want to look at someone who's an expert that can look at the big picture. So make sure you ask someone that. So conclusion to this, 50,000 foot view is very important to be successful in the real estate market. The right lender is key to your success. And then also remember, you need to have this strategy, right? Find out what you're approved for. Find out what you can purchase, your purchasing power. And then also, one thing I love to talk about is your exit strategy, right? What's your exit strategy if you're not making enough rent? What's your exit strategy where if you want to fix this up, how long until you refinance? What's your exit strategy when the market's hard right now, rates are high? How soon can you refi and make some money? So the key takeaway from all of this that a lot of people probably don't know, especially lenders don't know, there's more to lending than just conventional. There's a whole other breed, and we didn't even talk about it all, right? There's more non-QM type loans, there's more lines of credit, there's more commercial loans, there's a lot more out there. Get someone who is well versed in all of it to make the right decision for you. So I'll leave you with this question. Are you ready to have your portfolio reviewed, and are you ready to see what possibly can be done to scale to the next level? If you are, give us a call today, reach out to us, and let's see how we can help you scale to the next level. Once again, guys, it's Nathan with theLender. Look forward to hearing from you.